And after the big crash, time for some wild swings. It was a seesaw on the Wall Street as investors looked for clues after the 1624-point hammering that the Sensex saw just yesterday. The market opened in the green, taking cues from strong Asian indices, but the cheer was short-lived. Sensex plunged into a loss of 444 points after the Shanghai Composite and Japan's Topix took some severe pounding. The story turned on its head once again as value buying set in towards closing trades. Both the Sensex and the Nifty bounced back to end the day with decent gains.
Wild swings apart, no one is writing off India just yet though. In an exclusive chat with your channel, Chief Economic Advisor Arun Jaitley said that investors should read the India story separately from other emerging markets, and top market players seem to agree absolutely. Ramdev Agarwal of Motilal Oswal says that retail investors should take a long-term view and look at this fall as an investment opportunity. The continued coverage on the big crash and followed by the big reset is our top story right here on Business Tonight.
Call it the calm after the storm. The markets took a breather after the hurricane yesterday, even as the benchmark indices witnessed extreme volatility, swinging nearly 600 points during the course of the day. Despite being beaten black and blue, the markets opened in the green as investors went for value buying, pushing up the Sensex by 380 points in opening trades.
We still believe that it is a temporary liquidity kind of a squeeze, which is getting impacted. And if any market in these kind of corrections, I think offers value for investors really come in and build up their long-term positions.
But it was as if things were too good to last long. By noon, their fortunes changed dramatically as the markets slipped into the red thanks to fresh meltdown in the Shanghai Composite. The Sensex slumped 450 points to hit its lowest level in a year, and so did the Nifty. It was that sinking feeling all over again with just a couple of hours left for trading. And then came the turnaround. European markets opened with sharp gains, boosting sentiment all around, pulling out the Indian indices from the ashes. A swashbuckling recovery saw Nifty spring back above the 7,800 mark, while the Sensex lapped up a 290-point gain to finish above the 26,000 level.
IT and pharma names will be the ones that will find favor immediately in the marketplace, but I think now I can see far more reasonable value emerging in the market than, let's say, where we were probably a month ago.
By the time trading closed for the day, the NSE Volatility Index dropped nearly 5%, indicating a sigh of relief from investors. So is the worst over for investors? It's too early to say. After all, tomorrow is another day. Kumar, ET Now, Mumbai.
A time has now come where we'll also need a mindset change, where if we want to capture a global space for ourselves, the world was being shouldered by a powerful engine. That engine doesn't seem to be now running as fast, and therefore the world will require alternate engines. We are theoretically the least to be anticipated. So can we convert this into an opportunity?
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.